Hi everybody, Ken Heinz here, HFR President with the HFR 500 August 22 Performance Snapshot. August was an interesting month, possibly the most interesting that we've seen in a number of months. It was really a tale of two very distinct market cycles for the month, with the first 2 weeks of August being a continuation of the strong risk-on sentiment that dominated July performance. And the latter 2 weeks, and actually the first week of September, really dominated by the opposite risk-off sentiment, with steep losses across equity markets, rising interest rates, and falling commodity prices for the most part. Obviously, a lot of different commodities, but when talking about commodities, the number one commodity as it determines the hedge fund performance is really oil, and oil declined. What was most interesting about August is that through all of this, the HFR 500 and hedge funds posted a gain in a month when so many of these markets not only started lower on the month, but also had a sharp reversal from strong gains in the first part of the month. And we're going to talk about that and some of the decomposition of that over the course of this slide. But I think it was really one of the most interesting and impressive months of hedge fund performance that I've seen in a number of months. As you can see, the overall HFRI 500 gained about 0.5% for the month, driven and led by the gains in the HFRI 500 macro index. Now, that's been a consistent theme in the first 8 months of 2022, but what's different in this month is that it was not only that equity markets declined and that interest rates rose at the same time, and that inflation continued to be a generational problem, and that the Federal Reserve indicated expectations for even more interest rate increases. But at the same time, as I said in the earlier slide, commodities for the most part declined, led by oil. And so it was the macro sub-strategies and the diversity of those, including systematic trend following, commodity, currency, and multi-strategy and discretionary, that combined to produce a gain of 2.6%, a very impressive gain. Event-driven also posted a gain of almost 0.5%, and this was also impressive given that generally the month was more dominated by risk-off sentiment than risk-on. Again, two pretty distinct market cycles over the course of the month, but definitely it was an impressive gain for the event-driven index. The most interest rate sensitive area of the hedge fund industry, relative value performance, that also posted a gain of about 17 basis points, but still that's a gain when interest rates increased and credit markets widened. So it is impressive to have that inversely correlated. And even in the equity hedge, the most equity sensitive area, obviously you can see equity markets declined here. We have the NASDAQ 4.6%, S&P and Dow Jones also declined, but you have a decline of less than 1% in the equity hedge index, which is still impressive given the market environment that prevailed in the month of August. Drilling one level deeper into the sub-strategy areas driver of performance for the month of August, you see a gain in the HFR 500 macro commodity index was the leading area of performance, with a gain of about 6.5% for the month. Very strong gain, and that has been a consistent theme throughout 2022, is the HFR 500 macro commodity index. We're going to get to the year-to-date performance in a few slides, but that is the leading area of performance for the year. Macro multi-strategy, very similar, gain of 3.1%, 2.5% for HFRI macro systematic diversified. This is quantitative trend following across lots of different types of assets, primarily liquid futures contracts. Those gained 2.5%, and a gain about 1.6% in the HFRI event-driven multi-strategy index. Again, these all inversely correlated gains to the decline of 4.6% in equities represented here for the NASDAQ. Taking a slightly longer view of time and focusing on the first 8 months of 2022, consistent performance has been the performance of the HFR 500 macro index. Again, almost 15% gain for the year. And this is in an environment where equities have declined sharply, interest rates have risen, and as you know, commodities have been volatile, gained and then declined in other months. But the real strong, consistent asset performance of the year has been currency, has been the US dollar, and that has been a strong area of performance where the macro managers and other strategies, of course, too, have really benefited from that trade, and also obviously short exposure to some of the directional trends in equities and fixed income. You can see here the most interest rate sensitive area of the hedge fund industry is relative value arbitrage. That gained about 0.5%. All of the recent gain in August paired the year-to-date decline for the overall HFR 500 composite to about 0.5%. And you can see that the higher beta strategies, event-driven and equity hedge, also have declines, but obviously nowhere near the decline of equities as seen here by the NASDAQ composite. Continuing from a couple of slides ago when we were talking about the year-to-date performance of the macro index, you can see here very impressive gain for the HFR 500 macro commodity index, 45.2%. Really, far and away the leading area of performance. These are discretionary commodity trading hedge funds, and they have had the strongest gain for the year. The second leading area is the quantitative trend following CTAs. These have gained about 17.75% for the year. And again, that's in an environment where equities have declined, interest rates have increased, credit spreads have widened, and commodities have been very volatile, gaining in a number of months and obviously more recently declining. But 17.75%. What I think is particularly impressive about the gain in the trend following area is that in a month like August, where you have two very distinct and opposite market cycles in the course of the same month, usually takes some time for trend following strategies to reverse the trend. And you can see in this month, in this case, they were able to post a gain and continue to post a strong gain for the year. So it's not that it's been one consistent trend that they have benefited from the whole year or the whole month. They've actually navigated some pretty sharp reversals as well. So that's very impressive. 11.5% gain in the relative value volatility index. As you know, those are relative value managers that trade volatility as an asset class, and 11.5% in equity hedge energy-based materials, which, if you know from previous webinars, if I look back at the beginning of the quarantine in April of 2020, that has been the leading area of performance over that, I guess, almost 3 years now. And again, those are all against the decline that we see for the NASDAQ of 24.5% thus far. There's a lot of great information on our website about the Investable HFRI 500. So please visit the website, www.hfr.com. When you do get there, please go to the page for the Investor Guidebook. You can download that. That really talks about how the HFR 500 is a solution for many institutions for benchmarking challenges they experienced in 2022. If you're watching this video, and please subscribe to it as well, subscribe to the channel. We do regular performance updates on the Investable HFR 500 video. And if you'd like to set up a call, you can email hfr500@hfr.com or reach out to me, Ken Heinz. As you know from a previous webinar, we're extremely excited that the HFR 500 we have launched as of July. We launched the tracker fund that holds shares in the underlying constituents of the HFR 500 in conjunction with Aberdeen. And if you'd like to hear more about that or you have questions about it, please feel free to reach out to me directly, and I'm happy to speak with you and arrange to introduce you to people at Aberdeen as well if you have questions specifically about the fund. Thanks for watching, and look forward to speaking with you next month.